Guys, welcome back. In today's video, we are talking about how AMC is unstoppable, the shorts losing big, the MOAs coming, and many more in this video. First, we're taking a look at this. The plan was to wipe AMC out all the way back in 2021, with the COVID being the ultimate catalyst. Problem for the shorts was that Ape Nation never got the memo and a movement was born. So firstly, let's talk about how unstoppable AMC is at right now. Firstly, we were met with huge selling this morning, or at least huge resistance, as we saw AMC was actually down more than 3% today. And you can see from this wick, we saw the low of 1.17. Now, the important thing about this is that when you take a look at the overall market, what we saw was a red day, and that applied for AMC as well at the very start, along with, of course, the dark pool usage. We're looking at 70% today. But the important thing right now is we're just 2 minutes away before market closing. AMC is bouncing between 0% to 0.4, as you guys can see here. But the very fact is that they can't keep us down as they wish like before. They are struggling right now. When we see the entirety of the market all going down red, when we see the SPY and NASDAQ down, AMC is being bought. AMC is being viewed as the investment, and more people are now buying into AMC. A big reason for this has, of course, been the opportunities, has, of course, been in the current situation, how well AMC is doing, how well the box office is doing. Now, that isn't the only reason, because ultimately, when we talk about price discovery, AMC should already be in the tens, the hundreds. But when we talk about some of the catalysts recently for what's attracting investors other than the apes, it's because firstly, we're seeing the biggest start to April in domestic box office history, which includes pre-COVID. So you can already see how strong that is going. And that's exactly what we've talked about with how we're going to grow, how we're attracting more and more investors, how there is incentive for AMC to grow even bigger. And so this is the first part. And what we can see is how, again, if you take a look at the Q2 box office today, what we are seeing is how AMC is continuously growing. Q2, as of April 6, 271 million. This is what we've said with just the potential there is. And going back to earlier of what I've said with how more and more people are realizing that AMC is the golden opportunity, is because firstly, the industry that we're in right now is showing how it's growing. And when you talk about who's the most efficient in this industry? Well, AMC comes up. And then you talk about who's the most undervalued within this industry. Once again, AMC comes up. And if you ask yourself a third question, who has the most potential within this industry? Once again, for me, AMC is the answer. So already with those three things, you can see why I view AMC as one of the golden opportunities, why it's the diamond within the industry, and multiple other people feel this way as well. And we have to realize, just because AMC stock isn't up today, it doesn't mean that AMC theaters isn't bulking up their balance sheets. It's a Tuesday, theaters are packed. And quoting what Adam Aaron has said, my job is not to run the stock, my job is to run the company. My job is to create and build an increased value for you, the owners of my company, for the long haul. That's the right answer, and that's my answer. So we're still seeing how, again, the movies that have been released to still be packed, to still have people going in to go and watch these films. That itself is obviously a very, very good news. And it's going back to what we've said with who's the most efficient within this industry. Well, it's AMC, because not only are we able right now to attract the most attendance, but because of our merchandise sales, because of our food and beverages sales, all of these things are going to ramp up AMC's revenue and therefore AMC's profit. And so you can see how the balance sheet is improving. And one of the things we've always said with price discovery, not to mention AMC did in fact actually close with a positive of 1.19% at 127. But just looking at this right now, we know that the price movement shouldn't dictate how well AMC is doing. Even if the bar was red today, it doesn't mean that AMC was doing bad, because we can physically see that AMC theaters are being booked out. We can physically see that movie are making record box office. So all of these things is just talking about how AMC is going to continuously grow and why their balance sheet is going to get even bigger. Now, one of the things we talked about yesterday, and we can talk about it today as well, which is imagine shorting AMC at $1. One of the things we've said was because we've seen so many short sellers become vocal the moment AMC dropped below $1, which was for this period of time. And what we saw was that it's very likely for these short sellers to have took and made a new set of short positions when AMC fell below $1. It's because they were betting on the possibility of AMC going below to zero, or rather going to zero and go bankrupt, or staying below $1 and getting delisted. And that's what they were hoping for. And we saw how angry they were when AMC went above $1. We saw the comments made by a few short sellers when AMC went above $1, despite the fact they said that AMC was never going to touch $1 ever again. So it's what we have to understand with right now. We're seeing a lot of short sellers who recently created these short positions to be losing out on money because they thought that the moment AMC went below $1, it was going to go all the way to zero. But that is not the case. And we have to realize this as well. Banks cannot allow margin to continue to exist while losses amount. Bad loans will be needed to call back. Should have never gone on this long, but the financial institutions will forfeit. Now they and their hedge fund friends will pay big. So going back to what we said with earlier, the people who are shorting at $1, it's very likely right now their positions are in very, very big red P&Ls. And it's only going to continue to get bigger as we see AMC go up. One of the things we realize is that we can trigger these small mini short coverings at all time, because these $1 positions, they may have to cover their positions at 140. But if they cover their position at 140 and it boosts up to 180, which we know that there are another set of short sellers, then we'll force these short sellers to be in a stress as well. And of course, if that goes up to $2.10, another set of new short sellers that we know is up there. And if they have to start covering because the 180 has to cover, the price goes even higher. It creates this whole domino effects of the price going higher, covering, higher, covering. You guys understand what I'm trying to say here. And this is what we've said with the bad loans. This is what we've said with how some of these positions that they have took were very likely to get margin called. And this is what we're seeing right now. And you can see how recently we know we are having an effect. We know how we're beating the short sellers because AMC goes up, and it's a very small percentage in the grand scheme of things, but AMC goes up, and now suddenly we're seeing the negativity to actually increase. So previously when AMC was going down, people were talking negative about AMC, talking about how it's going to go bankrupt, blah, 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 blah. Now AMC goes up in price. AMC has no chance of delisting, and they're being even more negative by saying bad things. So how does that make sense? How can they talk bad about AMC when it goes down, but also bad about AMC when it goes up? And this is just talk about how these short sellers are trying everything they can to prevent us from margin calling these guys. But they have been in major troubles for years now. Of late, they have been forced to double down consistently in a last-ditch effort to avoid the inevitable. We are seeing this unfolding right in front of us right now. We've seen how they've put more and more capital, more and more money into suppressing AMC. We talked about the swaps, we talked about the options, we talked about the FTDs, we talked about the tokenizations. All of these things weren't just created 5 years ago. These are things that are happening on a daily occurrence even to this day. And so we know how much money have been used by them. We know how much money have been sunk by them. And now we're finally getting to that point where their operating capital is nearly exhausted. And the biggest point we have to get from this is that they are running out of liquidity, they are running out of capital, they are running out of time. But the apes, we didn't have to spend money every single day to finance our long positions. We didn't have to spend money every day to create synthetics to bring up the price of AMC. And no one has sold at AMC. So what they did was spend money every day just to make sure AMC doesn't even go up by 50%. What we did was just continue to buy AMC, and we're exhausting out their capitals. And we can see how AMC is able to push on a mediocre volume, and not to mention that most of the volume is still being routed to the dark pools. Now, one of the things I've talked about was, of course, we saw a 68% of volume, and we saw how AMC was able to go up on this particular day 12.5%. Now, the thing about this is that 68% is still very high. When you take a look at the average, we're looking at 30 to 50%. 68 is still higher than the normal, especially compared to our competitors within the market. So imagine if price discovery was actually working as intended, and we can see how AMC can easily go up to the tens, to the hundreds, just within a matter of time. Another thing to showcase how they are desperate, how we're seeing the suppression, utilization at 100% for AMC. And this is a big thing that we obviously have to see here about how they're trying to use more and more of these shares. Another big thing, another showcase of the struggles from the short sellers is that we're seeing 100,000 shares available to borrow for AMC. So this is actually a very low number. We can see 1.2 million going all the way to zero, and then at this time, 100,000 shares. So we're seeing now 0 shares available at certain times as well. We're seeing 1.2 million shares being borrowed for AMC. All of this is just showing the demand for AMC shares. And we know that every time the demand for AMC share goes up, it's because they are struggling to keep AMC down. It's because they need to use it to try and keep AMC down. And they don't want their short positions to obviously go up in flames. So as we see them borrow more and more shares, we know the exact effects that we're having on these short sellers. And the big thing is to not sleep on AMC. If you take a look at some of the previous data, AMC hits all-time high of 354 in Feb 28, 2015, goes all the way down to 2120, but in just 6 months, it registers new all-time high of 700 in May 31st of 2021. And this just goes on to talk about the potential there is for AMC. Not to mention, when we look at everything else that is going to happen, when we talk about real price discovery, when we talk about the fundamentals, when we talk about the psychologies, the sentiment, and then we talk about the final squeeze, we can see AMC go up into the thousands and higher. And that's ultimately what we're looking at. And so how we've been, doing these damages to the short sellers is because they didn't anticipate we would or could do it in terms of averaging down. So this is what we said with how we forced them to create synthetics every single day. They thought that APES was going to sell their shares the moment they saw a red day, the moment AMC went down 50%, 60%, 70%. But little do they know, we did the exact opposite. As we saw the price go lower and lower, we just viewed it as a bigger discount. It just meant that $100 now, or $1,000 now, or whatever the cashier was, would have bought us more shares now than previously. And every time we bought shares, we made them create more synthetics. And that's how we've trapped them. And that's how we've created this pressure that they can't get rid of. And apes have this mentality and understanding is that imagine not buying AMC under $1. The rule is so simple, everyone knows. Buy low, sell high. We're not even at the highs here. AMC at the minimum, without all the BS, is worth $20 a share. And we talked about this as well, just when you take the fundamentals. Now, we talked about how AMC should obviously go into the hundreds, but when you take the fundamentals, we already know how undervalued AMC is. So for AMC to 20x based on its current fundamentals isn't something that is insane, because when you take a look at some of the other firms out there, you see how overvalued they are. Not to mention, when you talk about the sentiment, if we see AMC goes to $20 a share, you can imagine how much more capital is going to flow in and ultimately push AMC into the hundreds, like we've said, and that will obviously trigger the squeeze. And we have to see is that fundamentals are what drives stock price. A stock that makes $40 billion a year will never be priced at $1 with a $10 billion market cap. And that's the same thing for AMC as well. As long as we see AMC do extremely good fundamentals, you know that firstly, it will never go bankrupt, but secondly, it would be absurd for it to be at that market value. And that's why we want to see AMC do well. Another thing we're looking at is GME, and this is just, of course, an insane number. And once again, I still have no clue why we're seeing this, how we're seeing this, but one of the things that people are tying this up to is the naked shorting of AMC, which could potentially be a thing. Again, if you have any ideas, comment down below and tell us what it means. Another big thing is that every time we see volatility in this coin, every time we see it go up to this absurd amount, what we're seeing is some catalyst happening for GME. In this case, firstly, we have the GME swaps expirations with the expiration date at 17th of April. So this is the first thing that's causing volatility. The next thing is that we're suddenly seeing 91% dark pool volume for GME, which is still very, very interesting because this is something that we don't actually see quite often. what we often see is an extreme dark pool for AMC, and it's somewhat still high, but lower in comparison to AMC. But this time, what we've seen recently is 91% on GME and 70% on AMC. And so it looks like something is about to happen, especially when we have Michael Burry, who says he's going to drop something that's extremely big. And so this could potentially be the groundbreaking piece of news that gets people to realize what's going on. Another thing, JP Morgan now says tokenized real-world assets market could grow to $13 trillion. Now, this is something that we talked about with regulations, we talked about how it affects AMC, but you can see how much money is already tied into this. And when we relate that to AMC, it feels like that is what they're using to suppress AMC. We then look at how they are saying this as well in terms of the private credit losses. Again, when we take a look at the macro, one of the things we've been talking about recently is how the private credit seems to be the catalyst for the recession. The private credit situation is essentially today's equivalent of the 08 recession catalyst. And so this is what we're looking at right now, and it could potentially get even worse. When we take a look at the Japanese yen, 159 against the US dollars. We talked about at 160, you typically see the Bank of Japan intervention. At 159.9, you're still very likely to see this, but the very fact we are seeing it stay at this high is already very concerning. And then we're seeing how the US oil price has obviously been going up extreme recently. We can see it's now up 110% since December 2025 low. This is what we talked about with the volatility. This is ultimately what we're seeing why some of the tech market is of course falling, because the oil price is going up. And then finally, I feel like we talked about this for a very long time and we should have been prepared for this, because Warren Buffett, Berkshire Hathaway, has a staggering $373 billion in cash. And this is what we've said with how he has been preparing for this. Berkshire Hathaway has been preparing for this. Yes, it stepped down, but he was already preparing this prior to his resignation. And so it looks like they're trying to prepare for something. As always, done, this is the F Financial Advisor. Do take us to your own soul, and I'll catch you guys next time.